Hello, traders. It's Thursday, the 31st of October, not the 30th. I've corrected that, but probably too late now. The 31st of October, 2019. It's 8:01 a.m. Chicago time. Hopefully, you are here, ready to roll, refreshed, and everything else. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This is episode number 1629. And this morning, the overall market sentiment is uh, actually off. It seems like risk off today. We have gold popping about $13.50, 0.9%. The bonds are up an entire handle on 9 ticks in the futures, up 0.8% on futures price and settlement. Japanese yen is up, British pound is up, Bund is up 74 ticks, and the 10-year notes up 17 ticks, large ticks. And to me, that's pretty much screaming risk off. Although the S&P hasn't really given up too much from yesterday, there was news overnight on the China-U.S. Trade deal. Crude is off 1.25%, trading at 54.40. Crude is in a bit of a dip kind of environment, and the dollar's off 38 cents following the 25 basis point drop in from the Fed yesterday, and the signaling by the Fed that they are likely to pause given current conditions and where interest rates are. So that's what's happening. Um, the overall theme currently is driven by we already have the Fed behind us. Uh, the overall theme is really driven by the U.S.-China trade talks. China said to doubt that any long-term trade deal was possible with President Trump. And yesterday, everything was looking good yesterday, um, vis-a-vis the scenarios, and then a wrench is thrown in where one side says there's not likely to be a deal, the other side says we are ready, a deal will be signed, and blah blah blah, and then later on, Chile comes out and says they're canceling the APEC meeting where this deal is going to be signed, and the market just went into a bit of a tizzy, and ultimately ended up rallying well before the news conference, or well after the news conference had pushed out. Overnight, China's October manufacturing PMI came in at 49.3, lower than 49.8 estimated. Sixth straight contraction. China said to have offered Macau as an alternative to the canceled Chile APEC summit. President Trump and Xi said to be working to sign a phase one trade deal. There's a lot of news flow, and it's just very, very noisy, to be honest with you. But the dip that we'll look at in a minute is the result of China saying that they doubt any long-term deal is possible with the current administration. China's unwilling to budge on big structural change. It demands end of tariffs for any phase two talks. It doesn't want to operate with a gun against its head. And about a half hour ago, we got initial jobless claims came in a little bit higher than expected at 218,000 versus 215,000. Looking ahead at the calendar, this Thursday, we're looking pretty okay. I mean, there's some releases up ahead. The Chicago PMI, it's not listed as a high tier release. Chicago PMI comes out about 12 to 15 minutes. It's a subscriber number right after the open, expecting 48. We'll likely see a move at 42 past the hour or so, with the release open to the public at 45 past the hour. And then this evening at 9:45, China's Caixin manufacturing PMI expected at 51. We'll see how that goes. Likely to have a reaction there. That's what's scheduled. Keep your ear out for what is actually released. Here's what was expected yesterday. I only did one scenario because scenario one and two would be mostly sideways, up and then down. Scenario two down and then up, and then either a push is expected to head up into 47 for a pause, and then potentially, if it has the power, 3057 becomes a key area. There's a double measured move area up here, 3057 to 3060 or 3057 to 5975. And then below us, 3014. Make sure you have that marked somewhere. 3014 is really big below us. We ended up filling the gap zone that we had underneath us that was left behind a couple of days ago. Oops. A couple of days ago, we ended up filling this gap yesterday and then popping back out. So that's what was expected. Here's what actually happened. We had what was an open drive on the open. The opening print and the high print on the open were the same, and the market headed straight off. Let me fix this. Not sure why it's doing that. So, so we have some selling right off the bat with the delta, right off the bat with price, and actually this is wrong. The OS was that, and 3150. And we just kept extending lower, and we ended up pushing all the way down to 3023, which was not expected. I expected it to dip below the prior day's low and then hold steady and then eventually start working itself up. The profile yesterday shows almost a double distribution. The point of control was not shifted up. The value area stayed inside of the IB, and the value area stayed with inside of essentially around this 3039 area, which is the MC point of control of this area. And we have a bit of a thin zone here at the IB high. So we have a single print at 3038 and a quarter through 3039 and a quarter or so, and we've dipped down to 3033 and a half in the overnight. So the fact that we stay the value area stayed down here, it's not surprising for FOMC because we're going to balance for the majority of the day, and then 2 o'clock Eastern comes around, and we have basically 2 hours and 15 minutes to shift the balance, and it wasn't able to shift the balance. But the volume up here was not all that great. Was not all that great in the upper distribution. It made a very nice effort to push up there. The overnight session held the highest price at yesterday's high, but the overnight session also has a pretty wide range given the news, and we are trading here at 3041, pretty close to the 39 MC point of control in the singles. I'm expecting the market to actually dip down into this 30, 34, 35 area before we get the next leg. So this looks to me like it is, we did extend the prior day's high, which was 46 and a quarter. We extended it to 49. I'm expecting it to rotate down from here and move towards this point of control. Notice the point of control is at the prior day's low. We really liked this area at 3032-ish, which was the prior day's low. We kind of hung out there quite a bit. My expectation, well, I'll go over my expectations in a minute, but that's what we're looking at. So we ended up pushing higher per scenario one, really. But I didn't find it tradable, to be honest with you. I just did not see a place to get on. This kind of action here is not my cup of tea. in terms of getting something on and being able to scale out and kind of add to a position and trade around it for a push into 3049. So that's where we stand. On the order flow, looking at ctbookmap.pro, what is that? Just 1 second. One second, please. Looks like. Looking at ctbookmap.pro, you can see that drop there in the overnight session, and it went sideways for a lot of the Asian session. The Europeans come in. Oops, looks like a what? Like a bad print in here. The European session looks, it went sideways. The European session started at about 2 o'clock, right in here somewhere, and it's pretty steady, pretty quiet, and then suddenly it just rolls right over on the 4 o'clock news that China doesn't think it'll sign a deal. And since then, we've been kind of moving back towards the bottom of the box that we've had in the overnight session, which was around 3046-ish. When you look at exactly where it was, 3046, 44 to 4, well, 45 to 46 is where the European session was kind of boxed out before the drop, and we've been drifting back up there. The news came out. The SOC for the news is around 3049 for this news, so we have a little bit of room to the upside, about 6.5 points for it to fulfill that. It's the market's pretty thin up above. If I scroll out to show you the full depth, market's pretty thin up above. I do have a stock zone at 57 and 60. We can see some size up there at the 60. We see some size at 55. At 55, a little bit of size coming in at 51. Not sure if it'll stick around, but this 30 to 32 area is really important down below. I'm paying attention to see if it rolls over, and that would be the key target. 32 and a quarter, 31 and 30 would be key targets to the short side, and we have the liquidity that shows it. Beyond there, it's kind of a thin play. We'll probably see something around 30.15, 16 right here as we approach. I'm expecting us to see some liquidity pull up in here and defend that area, at least on the first test. So that's how things are shaping up on the full depth. And let's go back to our review and look at the overnight. The overnight session had a pretty decent volume. Pretty decent volume. Let's take a look at that. 299,000 contracts. Pretty decent volume. It has a double distribution profile with the mid and the low volume node right up against that 44 and a half, 46 area, and that's the area I was talking about up above in the order flow. As we walk back up, that'll be the key area to watch, in my opinion. Once it gets through that area, then it's likely to push through to 3049, 48.49 yesterday's close, and then we're likely to chop into new highs yet again. So that's what I'm expecting in terms of the market action this morning. In terms of what's expected going forward, let me set up the chart here real quick. I am expecting range to collapse a fair amount today. I mean, yesterday we had 26 points, something like that. And today I'm expecting less than that. Not expecting it to do all that much. An open auction in range out of value, really the value area is somewhat valid. I'm expecting it to push back up into that 45, 46 area. I'm looking for it to roll over and push into this 30, 35, 36. And give us a test at the 32, 33 area before it pops back up. I would not be surprised if we have an inside day today at all following FOMC. But I do expect some positioning to take place. The secondary is an open that um, pushes down immediately and moves towards this 35, 36 area before we get an impulse back up, push into 48, 48 to hit yesterday's close, and then take out the prior day's high and hold steady here at the overnight point of control with a potential drift up into the close. Now, I don't know which one of these is going to take place. As always, I'm prepared and I know the key areas to watch out for are 34, 36, 35, 36 area. I know to watch out for 31, 32. That's the low of Tuesday, the point of control of yesterday. And then beyond there, we have 24, and then beyond there, and so on and so forth per the stock zones. Up above, I know 48 is pretty important. 45, 48 is pretty important. And then beyond there, we're looking at 56, 57 with the overnight high at 55. So those are the key areas. The question is, how do we, I got asked a question the other day, a very valid question, and that is, great with the scenarios, but how do I know which scenario is going to play out? The fact is, I'm not looking for the market to follow some lines that I'm squiggling on a chart. It would be pretty insane to think that that's how we trade. But the way I'm doing it sends that message, and it might create some confusion. It's not really how it forms. It's when I'm drawing these, pay attention to what the tests are. The market moves in a direction to explore prices and find out if there's interest in those prices before it encounters resistance or support or the opposing force. Then it turns around, goes back to the most accepted price recently, tests that, squiggles in that. That's where the squiggles come from, tests that area, and then it either bounces off of that or pushes through. If it pushes through, what is the next test area? What's the next most logical test area given statistical ranges, given the market context and the price action recently? This is what it's built on. So these aren't random. The fact that I'm looking for a test of this area here is not random. You can see the price action over the last few days and where it has rested. See that? This is where the stock zone comes from. It is both a volume profile based level, it's a price action based level, or a statistical level. And so to me, I'm just speculating on what would I do if it goes to 43, 44 to 46 and it turns around and we get an impulse down. Well, in that case, I'm aiming for the 34 area, the overnight low, and then we're likely to get a bounce. Why are we getting a bounce here? We're getting a bounce here, or why are we likely to get a bounce here? We're likely to get a bounce because it is the point of control. There's likely to be two-sided trading. The market has already demonstrated that it has liked that price. Balance to imbalance to balance to imbalance, and the market is a big fat test machine that we use to make money or lose money. But that's what it is. It's a big test machine. We're going to test this price, move on, test the next price. Oh, couldn't test the next price. There's no interest. I use the delta to figure out how much interest per price there is. And then it rotates the other way, test that price. Oh, there is more interest in exploring lower prices, no interest from the buyers. So what's the next big area? That's what we're looking for. So I can remove everything off this chart and just simply look at the price action, right? Actually, let's even remove that. And just you looking at this chart this way tells us that it tried higher, tried lower, it tried higher, tried lower, same prices, then it held in the middle. Those are the bars that are overlapping, then it breaks away. Where did it consolidate? So we can get the same information whether we're scalping off of a tick chart with nothing on it, or you have all the stuff on here that I use. Um, because I don't want to keep looking up where yesterday's low, high, IB, whatever is. So I put them on a chart. And so it makes it look messy, but it's layers of information. And that's really the background for this. It's a little crash course there into how I'm looking at things. And this is a little bit drawn out. So I cut it here. But I don't want to mislead you into thinking that the what I'm drawing on here is where the market has to go. The market doesn't care what I think or you think or anybody thinks. It is simply responding to the collective force of volume. That's the force. We can choose a direction, that's price, but it's the force behind it that tells us the quality of that direction. If there is no force behind an arrow, so you can point an arrow up in the sky, but if you don't pull that band, the string back far enough, then the arrow's not going to go very far. And volume is that energy. Volume is the energy. Price is the direction. Okay, so think of it that way, kind of like physics or whatever, or throwing a rock or whatever. It doesn't matter if you point a rock at someone, if you don't throw it far enough, and it doesn't have enough energy, it's not likely to get there. We can guess what the trajectory is. That's what those lines are anticipated to be. Good luck.